And today we are going to discuss about of the after the FI what will be happening in a project. Let us see. In general, in FI the main part is which we are calling as the main thing is an accounts payables. The main part of the thing is accounts payables. That means which we can simply say that in the payables of vendors and as well as invoices from the vendors and as well as the payments from the vendors and also the banking and as well as the cash discounts and all the other things. And after that we are going to maintain about of the accounts receivables. Accounts receivables. That means same like as in a payables. Here we are getting the customers and as well as sales invoices and as well as incoming payments and also the dunning notices and even the interest calculations and as well as the taxes part. But if it is a services industry, it was okay. That means if our client is in a service-based organization, we will directly make the invoice and also we will directly go for the sales. That means which we have received the service from X and which we are providing that service to the some Y of the customer. But the major thing is whenever we are working for the client of the product-based organization, it was not supportable. It was not good enough. That means what will be happening here in the product-based organization is the purchases was done from the vendor and we are making the sales to the customers. That means in between of the purchases and sales, what was happened is there was should be a costing is required. So what exactly is this costing and why should we have to make this costing? See, the purchases, that means which we have made a purchase of the raw material, but we are making the we are not making the sale of that raw material. We are converting that raw material into the finished goods and we are making the product of the sale as a finished goods. That means the raw material has to be convertible into the finished goods. In between of these two, what will be happens? That's what we are calling in between of the purchases and in the sales. When during of a product-based organization, it was in a product-based organization, there should be a costing is required. And most probably after completion of it, after completion of any FI part, that's why we have to go for the integration. Integration. In this integration, majorly we have to work out with the some of the important things which is called as a name BSX. What is the name BSX? In the sense of the BSX is for the inventory material. That means whatever the stocks which we made a purchase from the vendor, that stock, the physical stocks has to be shown in a ledger, which is that can be automatically integrated with the FIGL using by the transaction key of the BSX. And the second one is WRX. These are the transaction types. But exactly by the WRX, in the sense of the WRX is nothing but like a ZRIR. That means whatever the goods which we have received and as well as whatever the material, whatever the invoice which we have received. Say for example, which we have received the goods of the 1000 quantity, but the invoice has been received with the 5000 quantity. Then the difference will be there. Or else the client which we have placed the order for the vendor with the quantity of the 1000 quantity, but we have received the stock quantity of the 500 quantity, but received the invoice of the 1000 quantity. then the difference will be shown in the as a ZRIR. And the last thing is here it is in a GBB. That means whatever the stock which we are having, that will be making of the increasing and decreased. That means in generally for every company there was a stock positions will be there. That stock positions regularly will be increases and decreases day to day, which was called as a day-to-day activities of the stock positions can be handled by the GBB. Majorly for the integration from MM, which we need to integrate with all these things. And all these things, the raw material of the stock and the goods received or invoice received the stocks and everything will be comes with the three transactions. Those of the three transactions which we can call it as like as a name. One is the PR. One is the PR, that is called as a purchase requisition. And the second one is purchase order. One is the purchase requisition and another is the purchase order. And the third one is the goods receipt. Goods receipt. That means whenever we have made a purchase requisition, that means whenever or whatever we are having the requirements, that requirements can be fulfilled or has to be fulfilled by the purchase requisition, and after that we are placing the purchase order to the vendor, whatever we have created the vendor in the FA part, and from that FA part of the vendor, whatever the material which we have received and even whatever the invoice has been received. That means when we have done with the integration, what will be happens is by through the integration, we have received the stocks from the vendor. We have received the stocks from the vendor. And after receiving the stocks from the vendor, what we have to do that as which we said that we have received the stock of the raw material. And now this raw material has to be convertible into the finished goods. That means when during of this raw material into the finished goods, we will make the cost, or else which we can call the C, controlling. And in this controlling part, which we are having a lot of the parts here, the major thing in this controlling part is the first part of the controlling, which we can call as an first part of the controlling, which we are calling as an cost element accounting. Cost element accounting. In general, what do you mean by a cost element? The cost elements are nothing but like an expenses, whatever we are making or we are doing the purchases, or else when we are doing the manufacturing of the product, whatever the things which was happening, which we will call all those things as an elements of the cost element. Under these cost elements, we are having the three types of the cost elements. One is the primary, and the second one is the primary, and the next one is secondary, and the third one is overheads. One is the primary and the secondary and as well as the overheads. These three types of the cost elements. All the primary cost elements, which we are calling as a direct cost elements, and all the secondary cost elements, which we are calling as an indirect cost elements, and all the overheads, which we can call as an not a mandatory, either or else which we can do that as in the manufacturing overheads, nothing but like in a manufacturing wastages, which we are calling as an overheads. As like as which we are having the three types of the cost elements which we have to create. When the client is giving the requirements for us, whatever they are having, what the client is asking that they are having the different types of expenses, like direct wages, direct labor, direct material cost, and all those things which we are calling as an prime. That's what we are calling as all the direct cost elements will become into the cost element accounting of the direct cost element. And After completion of the cost elements, whatever the client is requiring about, in the next part, and that means in the second part of the costing, which we have to go for the cost center accounting. Cost center accounting. What is the cost elements in the sense of nothing but like an expenses which we are making when during of the costing, and as well as what is the cost centers in the sense of the cost center is nothing but like a departments. The cost centers are nothing but like in a departments. So what are the departments which the client is having? Just like as a production. In the production department, they are having some of the costs, and as well as the admin. In the admin department also, they are having some of the expenses. That means some of the cost elements. As like as a sales. In the sales also, they are having some of the expenses. As like that, whatever the cost is called as a cost elements, and where the cost was occurred, which we are calling as a cost centers. So what are the expenses is called as a cost elements, and as well as what are the where the cost will be done is called as a cost centers, and even in the third part, which we can go for the cost element groups. Cost element groups. What is the cost element groups in the sense of nothing but like a type of the cost element. Whatever the cost elements will be there, those type of the cost elements which we are calling as a cost element groups, and as well as cost center groups, nothing but like in a where the value has been divided in between of the different departments, which we are calling as a cost center group. That means which we can simply call as a combination of cost centers, which we are calling as a cost center. That means initially we need to know about of the what is the cost elements will be there, and what is the cost centers will be there, and what are the different cost element groups are there, and what is the different cost center group will be there in the client level. From the client we are getting all these things, and how to maintain all of these things from the client itself. We have done all these things, and after completion of this cost elements and the cost centers and the cost elements group and the cost center groups, let's take the testing part. Testing. That means when during of the posting of a transaction in general ledger posting or in anything or something whatever, what is the difference when we have added the costing? That means whatever the things which we have added the costing, that means when we are posting the expenses of any cost element, what will be happens? What will be happens? That can be decided. That can be decided by through this posting of the costing. By through this posting of the costing. Done. Up to here, that much of the basic of the cost element accounting and the cost center accounting, and as well as the cost element groups and also the cost center. And the next, we have to go for the next concept as an fifth one, which we are calling as an internal orders. In these internal orders, we are having the two types of the orders. One is the statistical order, and the second one is the real orders. So just take an example of one live example. In the statistical order, if the client is consist of the a number of the telephones, say so for example, they are having the different branches. In the Hyderabad, they are having the plant production, one telephone is there. In the Hyderabad admin's office, there was one telephone is there. In the Hyderabad sales office, they are having another telephone is there. As like as in the Bangalore, they are having the multiple of the cost expenses like that. So in this situation, instead of maintaining some X of the amount for each and every thing, what they are doing that they are giving some planning activities. The planning activities, and as well as actual. What is the plan which they have given for the Hyderabad telephone expenses, and what is the actual amount has been done for the telephone expenses by the each and every cost element wise. can be done by through the statistical order. That means the statistical orders can be released the amounts immediately when the cost of the plant will be available. That means plan actual variance can be divided plan. How much of the planning amount will be there? Actual, what they are asking, and the variance, what is the difference in between of the both? That all the things can be done by through the statistical. And if the same thing will be happen by the real orders also. Same thing will be happen by the real orders also. But the only difference in between of the statistical and real orders is the statisticals can be released the amount immediately from the cash in hand or the cash at office or something whatever. But in the real orders, it will be released one cost, whatever the cost has been occurred, the cost has to be released, or the cost can be released for a multiple of the times. That means if the assistant manager of the or the manager of the South Region manager has been given the fuel expenses for the 50,000 of this month, then what we have to be that we need to make it by the multiple of the parts, and that multiple of the parts can be settled by a secondary cost settlement, which we can call as a name settlement cost element. They called as a settlement cost element, and in that settlement cost element we need to maintain the cost object. That means the cost can be cleared, or that cost can be maintained to the payment, maintained to go for the payment by through the cost center wise or the business area wise, or else how it will make the payment for that particular cost, and even that has to be settled by the multiple of the times. That means one cost can be cleared, 150,000 of the fuel expenses can be cleared up to the 6 months, and within the 6 times. That means one cost can be settled in a different ways in a different types of the situations. Those which we can call as a real orders. And after completion of the real orders, let us go for the next step, which is called as a budgeting. Which is called as a budgeting. As which we said that planned and actual will be there. Even sometimes, if sometimes the client, the expense has been crossing to the planned value, then what it has to be do that information has to be go for the particular budget manager, and as well as from that budget manager it has to be make the settlement. That budgeting can be handled by the budgeting department, which is called as that will be the budget. And after completion of the budgeting also, see whatever the raw material which we have taken from the inventory management or the the manufacturing of that, what is the primary cost and what is the departments and what is the different types of the expenses like fuel expenses or the plant expenses or something, and we will club all this together into the product cost sheet. That means what is the primary cost? That means what is the raw material value? It was at 10 rupees. Okay. And for that 10 rupees, what would be the packing material value? That was only 2 rupees. And even when during of this production cost, we need to calculate some activities like as an electricity per hour. When the machine was running, if the one machine will be there, that machine will be runs for 1 hour, it will be the cost of the 100 rupees. But when that machine was running for 1 hour, it will give the output of the 100 materials. That means for each and every product, it will be takes the another 1 rupee of the cost. The cost elements has been already mentioned there. As per the cost element, we need to add all the things of the activities or the machine rates or the machine overheads, machine rate per hours, and everything can be handled in the product cost sheet. When during of this production cost sheet, we need to make the integration with the PP. Integration with the production planning. Why? Because we are not physically from the production. We are from the costing department. But being as in a costing department, we need to know that what is the expenses will be done when during of the costing, when during of the production. That's why we need to make an integration with the PP, and we will get the all the values into our side, and we will make the product cost sheet. And we will make the product cost sheet. Whenever a product cost sheet has been done, that means the raw material has been converted into the finished product for this cost. The raw material has to be converted into the finished product for this cost. Now, whatever the raw material has been converted into the finished goods, all the cost expenses has been added for each and every product. Now, we need to add the profitability. Profitability, that is which we can call as a name, profit center accounting. That means we need to add the profitability for that particular cost of the manufacturing product. For that particular manufacturing cost of the product, we need to add the profitability, how much we can make for that. That's what we are calling as a profit center accounting. After adding the profit also, we need to make a sale. Now see, first the raw material cost has been came from the MM integration, and the next the raw material cost has been came from the something, this one, and the next one will be the finished goods. That means that raw material has to be converted into the finished goods by using all the cost expenses. Now, after adding the profit also for that product, we need to make a sale. That means which we can go for the sales and distribution of integration. When during of the integration with the sales and distribution, we can get the revenue. From the MM and PP with the CO, we got the raw material into the finished goods cost. That's what we can call as a cost of goods manufacturing. And from the sales and distribution, we got the what is the cost of the goods sold. That means how much of the value which we have sold out for the product. And now, in between of these two, what is the profitability which I am having, which I can. That means that profitability can be calculated in a different ways. Maybe one client is asking to maintain the profitability by the area wise, and another client is asking to maintain the profitability by the journal wise. The same client, one client is asking to maintain the profitability by the area wise, and in the same company, same client, another director is asking to maintain the profitability by the business area wise. Another one is asking about of the product wise, another one is asking about of the customer wise. In this type of the situation, instead of the generating a multiple of the profitability reports, if we can maintain one, or if we can run one tool of the profitability to calculate, which is called as a COPA, controlling profitability analysis. When during of this controlling profitability analysis, we are creating one operating concern, and by that operating concern, how much of the revenue we get, and from that revenue, how much of the profitability we will get. That can be handled by the COPA with the multiple of the attributes. By using the single attribute, we can use for the profit center accounting. But if we want to make the profitability with the multiple of the attributes, not with the single attributes, and the situation of the multiple of the attributes, we will go for the calculation of those things by using the tool of the COPA, controlling profitability analysis. And including with this controlling profitability analysis, we are having one of the important thing in generally will be covered into the um, CO part, but most of the people doesn't know that's one. That is called as a name reconciliation accounts, and as well as the intercompany sales, intercompany postings. Both are the same in general, but what would be the exactly difference in between of these two in the sense of, say for example, in one group, that means we are working for the client of the Reliance group of the companies. But in some of the situations, in this company can have a number of the subsidiaries. Like one is the Reliance Communications are there, another one is the Reliance Petroleum are there. But unfortunately, this is not a season time for the for the Reliance Petroleum. At that time, the Reliance Petroleum is having the expenses, but they are not having the revenue. In this situation, but whatever the company code 2 is having the expenses, but they are not having the revenue. But their expenses can be cleared by the company code 1. In between of these two, how the reconciliation will be there? That means myself I am having the money. In my group, there is another company code which is not having any money. And in the situation, I am paying their expenses from my money. In between of those of the company codes, how the reconciliation will be there. And whatever the transactions which was happening is called as an intercompany postings. And in between of those two is called as a reconciliation accounts. And including with this, at the end of the financial year, in general, we are going for all the reports. All the reports in the sense of month-end closings, half-year closings, weekend closings, and as well as in a balance sheet, profit and loss, all the other things. All of the other things will be considered here. And even including with this, majorly we have to know about of the tables knowledge. When we are entering of the any data, when you are working of the anything, where the data will be going to there. Even whatever the client is asking in a as is, that will be not matching with the to be. How the gap has to be generated and how we can make the gap analysis. How we will fulfill that gap analysis. And even if the client is having some of the predefined data with them and they want to maintain or they want to convert that non-SAP data into the SAP systems using by the tool of the LSMW, how it will be. And even some of the user defines. So in this user defines, what will happen is if the client is asking one report or else one Dunning report, in the Dunning report it will be showing that in the Dunning report it will be shows that in the top of the page I need my logo with the color of background of the blue, and from there I need to mention my name, my company name. In the top down I need to maintain my address details and everything. In between of the matter, that was on a Dunning notice. If the client is asking to like maintain those type of the reports or something, those type of the applications, then how it will be. Those of the things will be also called as in a forms. That is called as in smart forms. And as like this, all these of the things can be handled by the CO level. That means whenever we have completed the FA part, immediately we have to maintain the integration of the MM. Then we can have the value of the raw material, and for that raw value of the raw material, we need to add the sum of the costings. Those are the cost elements, and where the cost will be occurred is called as a cost centers, and all the cost centers has been clubbed in together into a one cost center groups, and as well as the cost element groups, and as well as the cost element groups and the cost center groups. Using by those of the cost elements and the cost centers, when we are posting, what will happen? Even the cost has been in the real order or the statistical order. If it is the statistical order, how it will be going to? If it is the real order, what is the settlement, or why, how the settlement will be happening in between of these two? and all those things, and it comes into the internal orders. After completion of the internal orders, for those of the costs, how much of the budget we have allocated for each and every cost, and even after allocating of the cost, if the budget has been exceeded by the version, in the sense of it is having three versions. One is the 0, and the second is the 1, and the third one is the 2. 0 is for the current version. 1 is for the current version in the sense of current budget. 1 is for the re-budget, and 2 is for the re-budget. As like as if the cost has been occurred and it was exceeded, then what we have to do and how it will be happens, and all those things can be done by through the budgeting. After adding the budgeting, whatever the cost elements of the primary, secondary, and everything will be happen, we need to make it into the one cost sheet which is called as a product costing. At that time, we need to interact with the integrate with the PP, production planning, and after adding the production planning, whatever the profit centers which we need to add for that, and after adding those of the profit centers and everything, we will make the things of the product cost sheet, and we will go for the sales and distribution integration. From that sales and distribution integration, we can have the revenue. From that revenue, and revenue minus cost of the goods manufacturing is equal to profit, and that profit I want to watch with the different types of the attributes, wise the profitability calculation, which is called as a COPA, control and profitability analysis. And after that, reconciliation ledgers, and as well as the intercompany postings and the reports, and whatever the tables which you required, and the running forms and all the other things will be happen in general. Yeah, is it clear, Miss Vani?